Hi, welcome back, guys. Welcome back to episode 2 of our bootcamp or the beginner guide to trading. I wouldn't say forex trading because I'm going to be teaching something a little bit different from forex trading. Okay, basically, what we shall be trading is different from forex. We shall not be dealing mostly with forex pairs. We shall be dealing with futures and futures trading alone. So you won't see anything like gold or Euro USD on my page. So that was our previous lesson, and today I've come to teach you about market structure. We are still dealing with market structure. So what we are going to deal with today, what we dealt with was what happens in the market, how it works, how the system works. Now we want to know what is the system. So basically the system we're working with is, we are going to be looking at price action mostly. So under price action, under market structure, we have what we call trends and consolidations. So we have trends and consolidations. So under trends and consolidation, so this is how the market moves, like the behavior characteristics of the market. So under trends, we have two types. We have two types of these trends. We have uptrends, and we also have downtrends. We also have downtrends. So for uptrends, basically what it means, or you can call it a bullish market. What it means, this is a market that is going higher, like from a different price point, going higher for a higher target. Then downtrends, or what you can call a bearish market, is a market that is continuing lower, going lower for a lower target. So an uptrend is a market that goes on making higher highs and higher lows. So this peak that you see, that the peaks of what I was drawing, those are what I mean by highs and lows. So if this is a high, if that is a high, let me see. If that is a high, if this is my low, I'm having this as a low, sorry, and then I'm having this as a high that is higher than this high. This, if I'm to consider this as my initial high and this as my initial low, if I'm having a high that is higher than this high, then that high would be a higher high. No, sorry, I think I grabbed the wrong tool. So that would be a higher high, a high that is higher than my initial high. Now if this is my low and then I'm having a low that is higher than this low, then this would also be a higher low. That would also be a higher low, and so on and so forth. So this will also be a higher low, and a high that is higher than this high will be a higher high, going on and on. So in uptrends, we form higher highs and higher lows. Now in a downtrend, if this is my high, if that is my high and this is my low, considering that, because this downtrend is a vice versa of the uptrend. So if you understood the uptrend, then the downtrend would be easier for you. So if this is my high and this is my low, then this high is lower than this initial high, so that would be a lower high, like a low that is lower than my initial high. So basically that is so easy to understand. So this is a lower high, and a low that is, so if this low is lower than my initial low, this makes it a lower low. Now this is a lower low. Now this high is lower than my initial high, so that would make it a lower high also. You understand? So this is a lower high, this is a lower low, and so on and so forth. So this is also a lower low. Now if we happen to make a high here and then drop lower, this is a lower high, then a lower low, like that. But this is not how it looks on the charts. So on the charts it is in form of candles, like how I drew them for you in our first video. It is in form of candles. If I'm to do it like this, I have my initial low here, this is my low, this is my low, and then my high here, and my high right there. Now a high that is higher than this high would be a higher high, and that is this one. So this is my higher high right there. Then a low that is higher than this low right here, that is a lower low. Sorry, a higher low. I'm so sorry. That would be a higher low. So going on and on. So this low here would be a higher low, that because it is higher than this low, and then this high that is higher than this high, and so on and so forth, something like that. They go on continuing like that. Like that. So they continue like that. So now this is an uptrend. Now if this goes higher than this and then drops lower, that gives us a higher high. You imagine that what I'm saying is that if this goes higher and comes back down, so whenever it comes, I don't consider it because it has gone above this. I consider it after it goes above it and comes back down. That's when I consider it a higher high, because it can continue going higher and higher and higher without coming back down, and then I won't have a reference point for me to say now that is a high. So if for me to get a higher high, I would want market to go higher then come back lower. So that is it. So coming back to this, so that is it basically. So I haven't showed you an example for a downtrend. So that was an up. This is an uptrend. Now this is a downtrend. Like now this is market going lower. I wanted to draw those. So if this is my high, and then this is my low, market dropping. Let me see. If this is my high and then this is my low, market dropping lower than this low, so this low is lower than this low, so this is a lower low, and this high is lower than this high, so this is a lower high. Sorry for that. That is a lower high, and so on and so forth, as I said. Okay. What is going on here? So that is basically trends. Those are uptrends. Now consolidations. This is a market that is not forming lower highs or higher highs or any reference points. This is a market that is not actually going anywhere. So if I would say it like that, so this is a market that is stuck in one position, like not making higher highs or higher lows, like market that is in one position, not doing a thing. An example of that, if I'm to check, let me see. Now this right here, you see market is in one place, it's not going anywhere. Now this is a consolidation, this is a consolidation right here, that is a consolidation also. Now this is what we call a trending market that is moving. Then this is a consolidation, market is not going anywhere. This is a consolidation also. If this is a consolidation, this is a consolidation here, this is a consolidation, all that. This is what I mean by price action. These candles, these are candles. Now this is price action. Now reading this, that is when you're doing technical analysis, when you're dealing with that. So if I'm to come back here, like if we are done with consolidations, now you have gotten those terms. I would want to go to something more sophisticated, something more complex. Look, my SFX, by the way, something more complex. I would want to go to ranges. So ranges, if I'm having this market rolling higher and market going lower, so let me first take out this. This is a beginner guide. I'm doing this because a lot of people were asking for me about how to start everything, so I decided to do this as reference. I'll be referring you right here to these videos. Now, ranges. Range is the current market that I'm dealing with. As you saw, we had a lot of noise, like there is a lot happening. There is a lot going on. So the current market that I'm dealing with is the range. Now, if I'm to have market going higher and market coming back lower, we said this is a high. We said that is a high, and we said this is a low. You understand? So from this low to this high, after market comes back lower, this coming back lower is called a pullback. If I'm to draw like this, market is coming back, so those are called pullbacks. You can call them corrections in the market. So this is a pullback. After this pullback, after that pullback, I'll be able to mark this as my high. So from this high to this low, that is my dealing range. This high right here, if I mark it out, if I come and mark out that high, the solid line, and mark out this low also as a solid line, this is my dealing range. You understand? That is my dealing range. So in my dealing range is where I apply the concept of premium and discount, as I told you in the first video. If you didn't watch the first video, you can go back and reference to it. So this is where I apply the premium and discount concept. So I'll come and track from my low to my high. Now this is what I'm dealing with, and what we said in the past video, that we only buy when market is below the 0.5 mark, and we only sell when the market is above. So for me to look for a buy here in this range, what I'm dealing with currently, I would want to first see market going below 0.5 for me to take a buy. So I would want something to look like market coming lower here and then going back higher. So this is what I would want to look for. I would want to look for market coming lower then going back higher. So that is what I would be looking for. I wouldn't take a trade as long as market is still dealing around this area. I would want to see market inside this. Market should be inside this for me to take a trade. And say that now I'm in a trade, I'm expecting market to go higher. So just imagine if you took a trade here and you had to work out all these lows before market goes into your direction. So it's better, because this trading thing is a patience game. You have to be patient, you have to have time. So I would wait for market to drop lower below 0.5 into my dealing range and then try to take a trade higher. In what I mean by waiting for market to drop into the, so I would say I'm going to refer to this as discount and then this as premium. So I would want market to be in my discount. So for me to take a trade, I would want to get a confluence that is below 0.5, either a fair value gap or an order block or a breaker or a level, a fib level that is below 0.5 for me to take a trade, a buy trade. Now I'm referring to buy trades because I'm expecting a higher high here. I'm expecting market to go above this high to form a higher high for me to continue this uptrend. Now if it was a downtrend and it was something like this, I would want market to come back and go above 0.5 into premium, then drop lower to form a lower low. You understand? So my lower high, the lower high that is formed here, would be expected above 0.5. So that is what I mean. So if for me to complete this pattern like this, so if this is this, if this is this, and this is that, so this would be expected to form above this 0.5 line. So I would only expect this to form after it crosses this 0.5 line for me to take a sell that makes me feeling fine to consider market dropping lower to form a lower low. So that is range. A new range is formed when structure is broken. So I think that is it for this video. We shall come back and deal with a structure break, what a structure break is, what I have said that a new range is formed when structure is broken. We shall come back and look into that. So if you want to get further light onto this range concept thing, then you'll have to come back in the next video. Thank you. Have a great time.